Hello, we are a group of girls going to explain for you how to forecast financial statements. This table is given to forecast the financial statement. We have here 2012 and expected data for 2013. First, we will solve the income statement for 2013. Starting with sales, so you can get it by taking sales from the previous year, which is 2012, and multiply it by 1 plus growth rate of 2013. Then the operating cost is sales of 2013 multiplied by operating cost over sales of 2013. That you can get it from the table above. Earning before interest and tax is the operating income. So you can deduct operating cost from sales. Leave the interest rate, we will solve it later. Moving on, earning before taxes is earning before interest and taxes minus interest expense, even if it's empty. Then, taxes is earning before tax multiplied by tax rate from the table above. So, to get the total income, you have to deduct taxes from earning before tax. Moving to dividends is net income multiplied by payout ratio of 2013 from the table above. So the addition to retained earnings is net income minus dividends.
The second part is the balance sheet. First, we will start with the assets section. To get the cash, you take the cash for 2012, multiply it by 1 plus growth rate because it grows with the sales. Then, to get the account receivables, take sales for 2013, multiply it by receivables over sales from the table above. The same thing to the inventories, so you take sales 2013, multiply it by inventories over sales from the table above. Fixed assets is fixed assets of 2012 multiplied by 1 plus growth rate because it grows with the sales. Then total assets is the sum of these elements of this section. The second part in the balance sheet is liabilities. First, we will solve payables and accruals. Payables and accruals of 2012 multiply by 1 plus growth rate of 2013 because it grows with the sales. Then, to solve the rest, we have to do some calculations before. As it's known that total assets equal total liabilities plus total equity. Since we got 2101 for the assets, so it's divided into two parts which are debt and owner's equity. To get the total debt, we have to take the 2101 and multiply it by the total debt ratio, which is 49% from the given table. So the total is 1029.49. Then calculate the total loans, which is the total debt minus payable and accruals that we did before, which is 220. Now we can solve the interest expense by taking the total loans multiplied by interest rate from the given table. As we got 809.49, which is the total loans, and it's divided into two parts, which are short-term loans and long-term bonds. To get the amount of the short-term loans, you have to multiply total loans, which is 809.49 by short-term loans in the given table, which is 12.79%. Obviously, to get the long-term loans, we just deduct short-term loans from the total loans. Now, we can copy the green answers to Excel.
So the total current liabilities is the sum of payables and accruals and the short-term bank loans. Then the total debt is the sum of the total current liabilities and the long-term bonds. Then we have to enter the interest expense that we have got from the previous slide. So the numbers are going to change automatically.
Back to the total assets, as we mentioned before, that assets is equal to liability plus owner's equity. So we got 2,101 for the total assets and 1,029.49 for the total debt. Therefore, the remaining amount is equal to 1,071.51 for the owner's equity. There are two parts in owner's equity, which are retained earning and common stock. To get retained earning, take retained earning for 2012 and add it to the additional retained earning that we got previously. Then, to get the common stock, take the total equity 1071.51 minus the retained earning, which is 894.4. Now we can copy the green answers to Excel.
Now we can calculate the retained earnings by taking the retained earnings of 2012 and add it to addition to retained earnings of 2013. Then we can copy total common equity from the previous slide. Then to get the common stock, you can deduct the retained earnings from the total common equity. Then to get the total liabilities and equity, take the sum of them. Now we can see that the total liabilities and equity are equal to the total assets. Thank you for watching.